This year, it seems like concerns about inflation have gone mainstream, and new official data released yesterday by the Bureau of Labor Statistics confirms that, at least by the U.S. Central Bank's preferred measure, things are going to get a little bit worse in the near term. The Personal Consumption Expenditure Price Index clocked in last month at a latest in my lifetime high of 6.4% year over year. That's up from 6% in the prior month, and this is the lower number than the Consumer Price Index, which will get reported early next month. So what's up with inflation and why now? Well, a study just released by the Federal Reserve Bank of San Francisco puts much of the blame on the sizable fiscal support measures due to COVID-19, with direct payments to families made to partially compensate for mandated shutdowns getting special note. So, folks, this seems like it's bad for people, but good for the hyper-Bitcoinization narrative? Christy, what do you think?
I don't know. I've been looking at those charts and I don't get it, honestly. I mean, a lot of it is because I'm not a markets kind of person. That's not my expertise, but I thought it was interesting that the US spent so much on COVID-19, and that is the reasoning, because I think about how here in Canada, we got a lot of money individually for COVID support, and I believe it was higher than what individually people were given in the United States. And Canada is part of that little graph of, that shows the sort of low end, and then you've got the States going way up here. So I think that it might be a reflection of the priorities of where the money was allocated and spent. Perhaps giving people more money, the way the government in Canada did, was more effective at curbing inflation, or we're just not seeing the effect of it. Because I know that we were getting a lot of money individually per month, something like $1,200 a month. And I think you guys had to fight to get $1,400 altogether. It was nuts. So, maybe it is just the strategy, the way the strategies worked out in the end. But it is a little puzzling to see that huge divergence. Zach, what are you looking at?
Oh, I don't know. The inflation, it is high. I mean, it is eating into people's savings. And this is something that people have been saying in the Bitcoin space for a long time, right? All this money printing, right? It's going to lead to stuff like this. And I think, again, it is sort of validation of that perspective. And those perspectives were being voiced at a time when some of the traditional financial data didn't necessarily support it. So there was a lot of poo-pooing of some of these concerns from people who said, hey, if we're printing a lot of money, I think this might come back to bite us in the end. And I think some of this initial analysis of what is driving that does support that perspective. It's not exactly vindicating for people in the Bitcoin community because they suffer from this inflation as well. And others are probably suffering more gravely. But it is something that, again, seems to be here and potentially here to stay, which is also troubling given some of the initial analysis. But I'm going to throw it back down to Adam. When you see this, I guess from the crypto lens, how are you viewing it?
Yeah, there's a couple of things here. The first is that when you're looking at kind of inflation like this, the thing that the money printing has been going on for a long time. That's not the thing that's different here. The thing that's different here is how it was distributed. It was distributed to people who spent it in the real economy, and it was also done at a time when kind of supplies were constrained by many restrictions placed as a result of government responses to COVID-19. So we're seeing it kind of manifest here more, but we've actually had a lot of inflation. It's just we don't call it inflation. We call it a great stock market. We call it a housing market that's booming, right? And again, if you look at kind of all the dynamics behind that, well, the people who are driving a lot of those sort of gains that we've seen that, wealthier people are able to participate in really were companies who were receiving lots of support from the federal government, from the U.S. Central Bank. And again, in the name of stability to benefit us all. But really, so it's a question of what do you consider to be that. Now, Christy, your point, I think, is quite interesting. But it's also interesting to note that there are more dynamics going on right now with the U.S. dollar than I think that is impacting the Canadian currency, right? The Canadian currency doesn't have the reserve status. And again, if we look at how the U.S. is kind of flexing that reserve currency muscle, especially with kind of recent examples with, the Russian ruble, and again, just sort of taking that dominance in the global financial system and really weaponizing it in order to try and extract policy outcomes. And then the response that we're seeing to that, I was reading a story this morning about how India is actually considering using Russia's SWIFT alternative, basically, because they have no intention of actually following the sanctions that we've placed. And so, again, we're kind of seeing a dissolving of a dynamic that really has kept inflation quite low in the US relative to what it would have been relative to the way that our spending works. So there's a lot of complicated dynamics in place here. And really, this just is kind of a visible reminder that inflation is actually a thing. When you increase the supply of the money, prices go up. It's really not that complicated. What do you think, Jen?
Yeah, every time we talk about inflation, I just have a kind of sad and gloomy take. I think about the people, we talk about the high price of gas, the high cost of food. What I kind of narrowed in on this article was the last sentence talking about interest rates. The article said, with the Fed's dual mandate to promote employment and keep prices stable, if the jobs report shows a tighter than expected labor market, the Fed may be more aggressive in raising interest rates. And I saw a tweet this morning, and it was kind of like a joking take by someone who said, going to rewatch The Big Short to prepare for 2022. And I think about people who might be over leveraged in the housing market. And Adam, I think you know more about this than I do, but it's concerning to think about interest rates, maybe shining a light on that over leveragedness.
I mean, the whole situation is very sad because it is very much a cost that falls on the people who have the least sort of room to actually take these increased costs. And it's not done in a way that's honest, right? It's done in a way that obscures the reality of it. And I mean, until a couple of months ago, the Fed, who are supposed to be the utter experts in this when we're talking about these various, financial and kind of monetary issues, was, out there saying that inflation was transitory. And transitory, of course, fancy word for temporary. They're not saying that anymore. And again, this recent report out by the San Francisco branch of the Federal Reserve acknowledges that it's actually a policy problem that has caused, they ascribe 3% of the recent inflation. And then one other thing I'll note is that I did a deep dive into sort of how inflation is calculated maybe about 9 months ago when I was starting to get concerned about this. And the reality of it is that we don't calculate inflation. Like, we're comparing the numbers today against numbers from the 1980s. But we've changed the way that inflation was calculated several times in the 1980s and in the early 1990s. And I won't at all be surprised if they change the calculation again. And regardless of the reasons why they change it or how they change it, you can look at the numbers for how they used to calculate it versus how they calculate it today. And today we're showing numbers that are, again, about 6.7%, probably 7%, somewhere in that range when the next one comes out. But if we were calculating it like we calculated in the 1980s, we'd be at 14%, which is, again, as high as we've really ever seen in kind of the modern era of these sorts of calculations. So it's a very sad situation, and they're not being honest with us. And that's the part that's most kind of troubling about it, is that they think we're stupid and they think that, we'll just take it. And it, unfortunately, a lot of the reporting that's done out there is very credulous about these issues. So it's definitely a troubling issue, but we can move on to brighter topics perhaps.